Hello, everybody. Welcome to Thursday. The S&P 500 was up a little bit more than 0.5% today. So that's the sixth day in a row the S&P 500 has been up, and the fifth day in a row where we've set a new all-time high. Today, really, the driver was the gross domestic product report. So this is basically the productivity of the country or the revenue growth of the country altogether. And the expectation for the fourth quarter was 2% growth, and we actually came in at 3.3%, which is quite a bit higher. Market responded quite positively to that. On top of that, we got the PCE inflation report. Now, PCE, Personal Consumption Expenditure Index, is the preferred measure for the Fed. Now, this report comes out, just says what it was for the last quarter, not for the last month. We'll get the last month on Friday, and that'll be important too. But the last quarter was 2%. Previous quarter was 2%. Target for the Federal Reserve is 2%. Now, it was a 3-something quarter before that, 5-something quarter before that. So it's coming down just like it's supposed to. And if we annualize, of course, out the last 2 quarters, we would be at 2%, which is where the Fed wants, which is why the Fed is talking about, not raising rates. And, the argument now is about when they might be lowering rates, because you really don't want inflation to fall too much below that. Again, not to get into the deflationary area. I just want to emphasize this GDP report, which I think is very fascinating. Last year was supposed to be a big recession, big stock market drop, too many rate increases, something would break, all these things. Something did break. Regional banks started going out of business. They put together a couple programs, kind of set that up really well, I thought, so that, it didn't happen like it did in 2008 with Lehman Brothers, and we didn't end up with a big stock market drop. So we have a stock market hitting all-time highs. We have gross domestic product growing very nicely, actually. 3.3 last quarter's annualized out. Remember that the third quarter was 4.9% gross domestic product, so really good growth there. We average about 3.2% per year over the long term. Um, for a big economy like this, it's a really good number. So we're managing to create this soft landing scenario quite well, actually, where you have, decent growth without huge drop off in growth, and inflation continuing to come down. So really ideal scenario. You have to realize how unusual this is when you raise rates this much, and you have all these other issues going on. You would normally have, a recession. You would have negative gross domestic product, so basically country would be, retracting, which is what a recession is. And the stock market would be reflecting that. So we've seen some rough earnings, in my opinion, Tesla and such that came out last night. But keep in mind that, the stock market is looking forward, in 3 to 18 months. And the bad markets that we had before and some of the issues that we've had before are reflective of the fact that we're starting to see some deterioration of earnings here as far as that goes. But overall, some of the companies are doing very well. And I think, I would call it at least a medium on terms of the overall earnings of the different companies on the S&P 500, for example. And again, the stock market is reflecting that and it's looking forward. And so the expectation, of course, is that earnings going to start to recover and start to do even better going forward. So that's what's happening today. I look forward to being able to talk to you tomorrow. Of course, we do our show tomorrow, Talk Money with Tom on YouTube from 12:15 to 1. Feel free to join us. You can ask questions live. I do a summary at the beginning of kind of what I saw happening this week in the stock market. So it's actually been a pretty good week. So hopefully we'll see another, gain tomorrow as far as that goes. So look forward to seeing you then. Thank you very much.